What a week it's been. If you're new to crypto, welcome to the rodeo. Bitcoin and other cryptocurrencies can be some of the most volatile assets on Earth, and one of the main reasons that investors buy crypto is because of how much money you can make. But to get that epic upside, you also have to go through the major dips like we just had this week. For anyone who's been around a while, this probably feels like March 2020 all over again. A massive price drop followed by a quick rebound. If you're wondering what caused the drop, we'll get to that in just a second. Elon Musk might have been the public face of this latest downturn, but he may not have had the impact you thought. And finally, an update about the latest development on the Polkadot network. Stick around to the end to hear the breaking news about Fed Chair Jerome Powell's bombshell announcement of a CBDC. Hang tight as we take the dive on this week's Exodus Crypto News. Welcome back, my diamond-handed friends, and if you don't have them and want a pair, make sure to subscribe to the channel. The recent market crash wasn't quite as bad as March 2020, but it was close. The thing happened to Bitcoin, which went down by a cool 50%, losing more than $30,000 per coin at its lows. So what the heck happened? Why did Bitcoin and Ethereum go down 50% in what was otherwise a beautiful bull market? The answer is actually pretty simple. First came the initial dip. You can blame it on Elon Musk, FUD about China's new crypto rules, or just a natural market correction after months of big gains. Whatever the case, we got the dip and the market started to trend down. Well, normally that would be fine and regular, except in this case, there were tons, literally hundreds of thousands of traders who were leveraged long. In other words, these traders were borrowing money to bet on the price of Bitcoin going up. The initial dip was big enough that most highly leveraged traders were liquidated. When a liquidation occurs, the broker takes the traders' coins and sells them on the open market. Due to that selling pressure, a big enough batch of liquidations can cause the price to fall. That falling price can spark another round of liquidations, which means more selling pressure and even more liquidations. If there's enough leverage in the system, this self-reinforcing cycle of traders getting liquidated can cause a massive price collapse like what happened this week. The key indicator of traders getting liquidated is that the price decline starts slow and then rapidly speeds up until the price chart looks like a sheer vertical drop. It's brutal when it happens, but the good news is that these massive crashes tend to correct pretty quickly. And that's exactly what happened a few days ago, where Bitcoin rebounded from $30,000 all the way up to $40,000 in just 3 hours. So why did the markets rebound so fast? Well, the key thing to understand is that most people don't want to sell their Bitcoin below $40,000. It was all forced selling. So once the leveraged traders were wiped out, the price quickly rebounded. So what comes next? Some market commentators are calling for a couple of weeks of sidewise consolidation below 50,000. Other analysts believe that the bull market is going to get started again sooner rather than later. Well, whatever the case, what most people agree on is that the lows are in and we're unlikely to see 30,000 BTC and a $1,900 ETH ever again. Even though these massive market dips can be really unpleasant, from a long-term hodler's perspective, they are a great chance to pick up some coins on the cheap. In fact, our favorite analyst Willy Woo posted a simple to read chart on Twitter this morning that said, cheap coins. Basically, this dip resulted in Bitcoin being massively undersold, and the chart shows us historically what happens to the price when the NVT premium dips so sharply. The crypto fear and greed index is at an all-time low as well, meaning that people are scared because of the sudden dip in price. Well, everyone except those of us who have seen this before, lived through the last crypto winter and came out the other side better than ever. BTC goes up and to the right, and while I usually save this for the end of the episode, hold on, my friends, hold on. We talk about Polkadot a lot on this channel, and there is good reason for that. Now, Polkadot is in the news today because they just rolled out the first parachain on the Kusama testnet. And as long as everything works according to plan, we should see parachains coming to the Polkadot main chain sometime later this year. And that's big news for Polkadot, since scalability is one of the ways that the project could set itself apart from Ethereum, a network that's currently dealing with lots of congestions and frustratingly high fees. Fedcoin is coming. Yesterday, Fed Chair Jerome Powell announced the Federal Reserve will
play a leading role in developing international standards for CBDCs.
A CBDC is basically a digital currency running on a blockchain issued by a government. While they've been dropping hints for years, this is the very first time the Fed has confirmed they will be moving forward. Does this make a bullish case for Bitcoin and crypto in general? Well, I'd like to know what you think in the comments. Sometimes a bit of historical context can help put things in order. Now, a mere 6 months ago, a $40,000 Bitcoin and a $2,700 Ethereum would have been a huge deal. Now, just because we've dipped down to those levels doesn't mean the crypto ecosystem has slowed down. And thanks for watching, everyone. Make sure to hit those like and subscribe buttons, and until next time, hold on.